Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
First and foremost, before we get into the market prep video for the week of June 5th, 2015, big congratulations to the U.S. national women's soccer team. Watched the game, both the Germany game on last Tuesday as well as the finale today against a great Japanese team as well who won the World Cup 4 years ago. And I watched it with my 11-year-old daughter, both games, and we are just sitting there just cheering and excited, and we just could not be more happy for the U.S. Women's national team. Big shout out to the women's team. Just absolutely amazing win. Carly Lloyd just killing it all over the place. Just absolutely fantastic game. So big shout out to them. But on to bigger and not better things, but definitely bigger in larger scope of things. Today, the marketplace dealt with the Greek referendum vote regarding the yes or no if they are going to agree by the harsh austerity measures put forth by the ECB, the European Union, Germany, and the Netherlands, and pretty much everybody else in the Eurozone. And so they had the vote today, and the vote basically passed with a resounding no. Close to over 60% of the populace voting against agreeing with the Europeans, 40% agreeing that they should maintain the austerity measures. But what a win for democracy in 2015. Usually these things are done through straw polls and innuendo and shadow bankers and government and you name it, and democracy plays out, democracy wins out. And first of all, I think it's a smart move by the Greeks to not agree to the harsh austerity measures. It does not mean that Greece does not need to do massive reform from a taxing perspective, from a business perspective, from their economic system. But at the same time, they were never going to win out in the European Union. The economies are different, the currency values are different, and with where Greece is from a debt-to-income perspective, they need something a little better than just bailouts to pay off their creditors, more bailouts to pay off more creditors, and that can't be sustained. And so they did vote no against that. Now, first of all, that's going to have major movements to the financial markets, regardless of whatever any pundit says out there about Greece already baked into the market or so on and so forth. The two of the bigger gaps I've seen on a weekend occurred in the last 2 weeks. If you're looking at the euro dollar here, let's go to MetaTrader, and here we're just looking at the euro dollar pair. We're going to drag it onto the chart, and what we're looking at here is we're looking at a 15-minute chart, and as you can see, if you take your look crosshair here, this was the close on Friday right there at $1.1105, so right above $1.11, and all of a sudden the very next day it gaps down 113 points. And as you can see, this is current market action now. As you can see, it's kind of inched its way back up again. And how I initially kind of traded this, initially, I did not carry any trades coming into the weekend. I just thought that, and I talked about that in the Forex report last week. I thought that was too big of a gamble. I thought that was just, hoping that you get one way or the other. And regardless of what the polls were showing, it was a dead heat coming into the weekend, regardless if it was going to be a yes or a no vote. And even if it was a yes or a no vote, you still didn't know how the market was going to respond to it. And so I thought it was a gamble coming in with any aggressive trades. I came in at no trades whatsoever. And initially what I did, and I'll kind of talk through this on a 5-minute chart, initially I went short right here. So about 15 minutes into it, the initial movement was down, came right back up, and then on this little candle right there, I went short. And I was really happy with the short trade until it popped right back up. And yeah, you're seeing this on a 5-minute chart, but if you look at the actual initial reaction here on a, and we'll get to it here in just 1 second. That's June. Let's go all the way there. Okay, now here's on a 1-minute chart, and we're looking all the way again in June. So give me 1 second. So here's your 1-minute chart on July 6th. Let's go back right here. So as you can see, this 1 minute chart, little down, little up, and this is kind of where I personally went short coming down. And as you can see, it breaks that support level, and I'm real happy with it. I then put an initial stop loss right above this level right here, and as you can see, boom, boom, 1 minute, boom, boom, knocks out my stop loss. And then I waited for that first retracement back down into here, and on that 1 minute chart, I decided, you know what, let's go for it. So coming back to the 5 minute chart, it was on this candle right here. It comes back down in price right above the 110 mark, and at that point I decided to go long with it. And so I held the long trade up until just barely as it started to fill this gap. So here's kind of where my entry order was. This is where I currently got out of the trade, and now I'm just kind of waiting and seeing whether I go short or long. It won't be until the European market open. The other one I want to show you is the Japanese yen pair. This one I did a short on the downward movement. See how the upward after the gap open, it opens down here, but then initially starts coming right back. And here I went long, and so I went long on the open, and it boom, 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 comes up, fills the gap, close the trade. I'm out of that one as well right now. Still looking at potentially a swing trade on the long U.S. dollar pair, because I do believe there was an overreaction to the event with the Japanese and the U.S. dollar pair, and the Bank of Japan came out and made some, whatever it takes type quantitative easing comments right when that happened, kind of moved it back up. So thank you to the Bank of Japan for making me some money today. So that was kind of the initial reaction, negative on the euro, negative on the dollar against the yen. And then if you're looking just kind of say at the euro-Japanese yen pair, you'll see an initial reaction down, back up as well, very similar to the U.S. dollar. Let's look at the euro-Swiss pair. Obviously a gap down, close, wouldn't touch that pair. But the initial reaction to the event was negative to the euro. It's still going to be volatile, ladies and gentlemen. This does not mean that the European Union is folding its tent. It doesn't mean that there's no more ECB, and it doesn't even mean that Greece is guaranteed to leave the Eurozone. It simply means that they did not agree to the harsh measures that the European Union put forth in agreeing to release the bailout funds. And so we're talking billions and billions of dollars. And what the Greeks are going to be doing is they're going to go back to the European Union, and they're going to come back with, kind of a mandate to a certain extent to negotiate better rates for the Greeks. Regarding what the Greeks do from there depends on what the Europeans do. My personal thought process is the Europeans will not take this lightly. That I do believe they're going to dig in their heels a little deeper, and I do believe that the percentage that the Greece actually leaves the EU in time and the euro first and potentially the EU second, because those are not one and the same either, increases to about 65-70% more than likely. So I am leaning on a Greek exit here. I think today really kind of put forth that even further. Now, how does that impact the other marketplaces out there? Let's go ahead and let's look at the dollar index here. As you can see, the dollar is going to respond favorably on the initial outset of the news, and as you can see, it did. It gapped up above its intraday resistance levels there. It retraced back in to fill the gap, kind of what we saw the euro do, kind of what we saw the dollar yen pair do as well. And so it kind of filled that gap, and now it's slowing momentum. I've liked the dollar, and I am pro dollar as long as it stays above $95. Anything under 95, it looks between 95 and 92 as the ranges. Kind of show you on a daily chart here. Let's just kind of highlight that. So here you got from 94 support level down to about 93 as support level. Your top level is around 97.5. Those are kind of your ranges, and you got two ranges here. You got one from 93 to 95, then you got 95 to 97.5. As long as it stays above 95, I'm going to be bullish on the dollar. But even if it does cross down under 95, it doesn't mean I'm going to be bearish. It more than likely means I will be neutral on the dollar. So a positive reaction initially to the dollar, but it was not sustained, and it wasn't nothing big either. Now in the S&P 500 though, obviously this news of the no vote winning out in Greece has not been met favorably. It did gap underneath support levels at 2050, and it currently is at another support level, a major support level at 2040. The initial reaction to the news was obviously a negative. You see here the gap down, as you can see right there, the gaps down in price on the intraday chart, and then it just retraces a little bit right there, and it's really kind of slowing its momentum. And unless something happens with the ECB today, or unless something happens specifically with Germany and the EU, saying some harsh tones or whatnot, I kind of expect the market to open somewhere in the neighborhood of the 2040 to 2050 range. So certainly a gap down. I don't anticipate the gap being filled before the market tomorrow, but I am really looking at the open tomorrow. The cash open at 9:30, the equities open at 9:30 Eastern time. And if there's an initial positive reaction to this, that buy the dip mentality is still in fold. This is a negative. Anybody trying to paint this as a positive, anybody trying to paint this as being built into price action, does not understand what they're doing. This is absolutely a negative. It's a negative to stability in the EU. It's a negative to the geopolitical situation around the globe right now. It's a negative to the currency price. It's a negative to the euro. It's a negative to the ECB. It's a negative to the equities markets around the world, even though Greece is only $1 billion problem. But if Greece ends up leaving the euro, and specifically if they end up leaving the EU, you're going to have to start talking about Italy and its $1 trillion debt burden, or Spain or Portugal and their debt problems as well. Like I've said for many times, Greece is not, in the grand scheme of things, Greece is not that important. But it's what Greece represents to the greater puzzle, the greater pie. And we just saw a little bit of that play out today. Me, for one, I'm glad what the Greeks did. I'm happy for what the Greeks did. I think democracy won out today, and I think the youth, the millennial generation, got out there, and they really kind of shaped this vote out there. Over 70% of millennials voted for a no platform because they're all broke without a job. That marketplace has been absolutely decimated, and this is the one thing I want everybody to understand. The bailout money that Greece gets does not go to the Greece economy. It doesn't go, some of it certainly does, but not everything. It's like a crooked charity, the ECB is. The ECB will basically print money to loan to Greece to then pay off loans to the IMF or Germany or back to the ECB. It's an absolute crooked Ponzi scheme. It's a crooked charitable organization. If it was here in the U.S., they would probably be put in jail. Well, not necessarily. We don't put Goldman Sachs or JP Morgan or Citibank in jail either. So I'm sure we can make some type of deal with them. But at the same time, I just want it to be absolutely known that Greece, these bailouts doesn't cure Greece's problems. All it does is go back to the creditors who basically printed the money in the first place. And so what Greece did, I thought, was a smart thing. I actually think leaving the euro is a smart thing. I'm not sure about leaving the EU in that capacity because, again, those two are not tied together. Greece can certainly leave the euro, but stay in the European Union. And so I think if they do leave the euro, they can get back to some semblance of a monetary policy that can aid Greece. Is it a win-win scenario? No, everybody loses in this debt burden, bailout craziness world we live in 2015. There are no winners out there right now unless you're talking about the bankers who can do whatever they want. But for the Greek politicians, for the Greek populace, this is a losing proposition, but it's better than the alternative. And that's what everybody has to see out there is even though this will spark a depression in Greece, it's not like they're not already going through it right now. And at least they can start doing some monetary policy that perhaps can get them back to some degree of semblance of a rational, logical economic system, maybe 5 and more than likely 10 years from now. But if you do these constant bailouts, you just kick the can down the road and the debt burden gets worse, not better. So here's to you, Greece. Tip of the hat. Knock one back, everybody. This is Matt Justice for Tackle Trading to kind of talk to you about what the Greek news, how it impacted the markets. Expect the markets to come down tomorrow. I expect the dollar to rise a little bit in relationship to the other currencies, especially after what we've seen seeing in the initial movement after the markets opened up in Sydney, Australia, and now in Japan. And I expect the VIX, the volatility index, to spike tomorrow as well. The latest read on the VIX was it was up about 15% overnight. Obviously, we still got quite a bit of ways until the market opens up tomorrow. This is the Market Prep video. Matt Justice, Tackle Trading, getting the game, changing life one trade at a time over there at tackletrading.com.